Today is Wednesday, May 18th. It's about 4:15 in the afternoon. And this is Nick Bentley. And today is Wednesday's Teachable Moment. And guys, today I want to talk about some of the things that happen in trading often. And it's something that you're going to have to get used to. But I kind of want to go through a trade that I had mapped out on the Euro that I posted inside of our inner circle. And for those of you that follow Trading Price, we had a short on the Euro that we posted this morning. And we had this level marked out. Now that post was created about 5:15 in the morning. And we had this level mapped out, the initial entry point. This is our zone right here. And we had a drop base drop, and we posted it when price was down around here somewhere. So you got to pretend like you don't know what happened with price, right? At the time of that posting. And so we had this kind of drop base drop, came down here, and I was looking for a rally back up into this area. Now, as price rallied back into the area, we came within 5 ticks of being filled. And we don't front run our trades. We don't try and get in early. We wait for our zone to be hit. It helps us manage our reward to risk ratio. And I didn't cancel the trade at this time. What I saw was as price came down, we were unable to breach a new low. And that resulted in basing before we reached our level. Now, one of the things, excuse me, one of the things that we always talk about inside of our Accelerator program and inside the inner circle is that basing before a level does 2 things. Number one, it absorbs some of the selling pressure that is inside of our level. And number 2, it reduces our reward to risk strategy. So what happened is we have this basing, and as price spiked back in, we as soon as we created this new low and started to rally, I canceled our trade. All right, I wrote that inside of our inner circle. I said, unfortunately, I'm compelled to cancel the trade because of the basing and because we weren't able to create a new low. And as price came back in, the high on this wick was 10535, and our stop was at 10555. You can see that right here, 10555. So we would have been able to stay in this trade had we kept the trade the way it was. And then of course price falls down, hits our first target, and is about to hit our second target. So I always ask myself the question on when, or one of the things I always talk about is there's way more to learn in trading from looking at your losers and your missed opportunities than your winners, because you're more likely to analyze those things. And it's important to analyze all of them, but especially the missed out on ones. What could I have done differently? What should I have done differently, if anything at all? And when I look at what we have here, in retrospect, I'm not exactly sure that I would have changed anything. We missed out on our trade. We consolidated. We came back into the level. It absorbed our selling pressure that was inside of here. Nonetheless, though, price did go our way. Now, in my experience, basing before a level when we are above 40 on the RSI is indicative of price breaching the level. And so it didn't happen this time, and that's all. Sometimes when you're trading, you have to remember why you make the decisions that you do. It's always easy to go back and play Monday morning quarterback on whether or not you should have taken a trade or you should not have taken a trade. Of course, it's easy to go back in retrospect, but in real time, when things are happening, you have to make educated and informed decisions. And in this case, I don't think that I would have done anything differently. Now, today, the NASDAQ is down 5 1/3. The S&P is down 4 1/4. The YM is down 4. Like, there's a lot of selling pressure in the indices. Almost every soft commodity is down a couple percentage points. A lot of the currencies are down right now. So a lot of things are falling, but that wasn't the case at, 8 or 9 o'clock this morning. It's been a sell-off kind of day. So again, it's always easy to go back and play Monday morning quarterback, but when we look at this, we abided by our rules. We didn't lose any money. We may have missed out on an opportunity, but the key in trading is understanding that you have rules and that those rules are designed to protect you. So if you didn't learn anything at all from this, it is that if you're going to be a successful trader, you have to abide by your rules and go back and ask yourself the question, what did I miss, or what would I have done differently? And in this case, I think we did everything right. We just missed out on the trade. And that is sometimes the way it goes. In the world of trading, you're going to have to wrap your head around that. So, guys, with that, I hope you have an excellent rest of your day, and I hope you take it easy. Don't forget to hit the subscribe and the like button. And as always, if you want to find out more about trading and the rules that we have in trading, I encourage you to check out tradingprice.com. All right, guys, take it easy.